Wako Watanabe, professor in the Faculty of Business and Commerce at Keio University, focuses his research on the relationship between credit availability and property prices.
What is common both to the Japanese banking crisis and the global financial crisis of 2008 and 2009 is that they are caused by the collapse of the bubble in real estate prices that causes loans collateralized by real estate to become non-performing.
Professor Watanabe's current project is Leverage a Determinant of Asset Price, examines the relationship between greater credit availability and therefore borrowing capacity and higher real estate prices. There are currently two hypotheses regarding this relationship. The first hypothesis is that rising real estate prices increase the collateral value of properties, so that property owners have increased borrowing capacity. The second hypothesis is that, given access to increased borrowing capacity, people will buy more expensive properties, resulting in higher overall property prices.
In this study, we aim at examining the second hypothesis using the data. This is important from the policy standpoint. For instance, there is a view that the so-called quantity regulation implemented by the Ministry of Finance at the peak of the bubble, and this regulation requires that lending to the real estate industry grow less rapidly than total lending. And this then triggered decreases in real estate prices. This view is plausible only when the second hypothesis holds true. For this study, we collected the data of actual property transactions that took place from 1991 through 2011 in Tokyo 23 wards. We construct loan-to-value ratio, or LTV, as defined by the ratio of the loan amount to the property's transaction price as a measure for availability of credit to a property buyer. We then run the regression of the unit price of the property on LTV as an explanatory variable. Let me summarize our main findings. Most importantly, we find that a 10% point increase in LTV leads to a 2% point increase in the property price. Many property transactions actually do not involve borrowing. When cash-only transactions are excluded, we find that a 10% point increase in LTV leads to a 15% point increase in the property price.
From now on, Professor Watanabe plans to expand this study.
We are currently collecting the data for more rigorous study. We are collecting the data about property attributes. These attributes include the distance to the nearest railway station, floor area ratio, and building to land ratio. We will revise the paper through presentations at conferences and workshops overseas, and we are planning to submit the paper to a high-ranked journal.